And you can see for 4 straight weeks, starting the second week in March, first we had Deutsche Bank, then we had HSBC Bank, then we had JP Morgan, and then Standard Chartered Bank show up one after another for 4 straight weeks. And Jamie Dimon evidently is there right now. And could there be a coincidence with these 4 bankers showing up? And since that first week in March, the Shanghai Metals Exchange have bled down in silver to a new low not seen since 2020. Who knows what deals were struck in the back room at the Shanghai Metal Exchange? But it becomes really interesting when you realize something that I didn't realize until watching Mr. Jensen's interview, and that is that gold cannot be exported out of China without first depositing a bar into the Shanghai Exchange. So then you can export it. So this is contrasting with silver, which can be exported. And it would seem to indicate to me that the banks are there not to talk about gold. It would make no sense. They would have to deposit their own gold first into the vaults in order to export it. It makes no sense. They're there to talk about silver. And it almost speaks to a desperation. Please help us. We're trapped. We have massive short positions that are naked, and I'm going to get into that, but we don't have the silver. Help us. We'll work out a deal. Maybe it's gold related. Who knows?
Join us as Andy Schectman delves into a potential historic short squeeze in the silver market. Discover how major banks like JP Morgan and HSBC are scrambling for silver, leading to a significant market shift. Learn about China's massive silver imports and the unprecedented decline in inventories. Could this be the generational move in metals we've been waiting for? Stay informed and don't miss out on this unfolding story.
At the beginning of the year, we were told 200 BRICS meetings. Well, today, they're having a big BRICS meeting related to finance. I think the actual title of it is the BRICS Deputy Finance Ministers and Central Bank Governors. They're meeting today. I wonder what that's all about. Could it be discussing their commodity-backed currency? Who knows? But the big meeting in October, the election in November, there is no shortage of things to talk about and ponder. But today I want to mostly talk about silver. And, you know, I don't know if you'll let me just go here. I watched an interview on Palisades Radio with a very, very fascinating man named David Jensen. I want to give him credit for a lot of what I'm about to talk about, but it got me digging into what he was talking about because it made so much sense. So I started digging myself, and I find what he had to talk about fascinating. And I think when you put all of this together, it starts to put together an interesting thought experiment, if nothing else. So I've really been trying to put all this together over the last few days, so excuse me if it lacks a little bit of coherence. But today, we've talked a lot about the arbitrage going on in the Shanghai Metals Exchange, Shanghai Gold Exchange. Today, 28th, silver closed at $36.01 on the Shanghai Gold Exchange. They can't hold this down anymore. They can't. And when you see open bids in Shanghai for $36 silver, I think it's just the beginning. But let me try and put all this together. So it appears as though we have the makings of what could be a giant silver squeeze. And I would also argue it appears to me Zoltan Pozsar was dead on. I think in 2020, he called the Bretton Woods 3.0 the system that will be all about commodities and transparency. And it's as if the commodities are becoming more valuable than money. And let's call it currency, not money, more valuable than currency. You know, there's an old saying, he who has the gold makes the rules, but you could go even further and say he who has the gold, the silver, the rare earth metals, the copper, all of the commodities, hard and soft, make the rules. And when you think about China accumulating the London Metals Exchange, when you think about China striking deals for natural resources all around the globe, when you think about, including food, wheat, corn, soybean, you name it, when you talk about the BRICS nations in general being commodity rich, this begins to make great sense. And it seems to me that the gold and silver markets are literally playing by a new set of rules that I've never seen before in my time, 34 years in this industry. The resiliency of the market is astounding to me. These are things that never have happened before. And I think especially silver. And when you look at the COMEX numbers and you can see that these bullion banks the cartel bullion banks have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. And they're going to be forced to cover the paper shorts.
Andy Schectman discusses major banks like Deutsche Bank, HSBC, JP Morgan, and Standard Chartered scrambling on the Shanghai Metals Exchange to address massive short positions in silver amid a dramatic decline in inventories. This suggests a potential short squeeze driven by high demand from China and India, hinting at a significant shift in the value of silver and gold.
And I think that's something that, we've always just taken for granted. People will say, well, they can just keep doing this forever. You can in an environment where the demand for those commodities is non-existent, but you can only manipulate a market over an extended period of time by pushing it in the direction that it is truly going. And the trust in the United States and the Western system has been extraordinary for a very long time, but it's as if the glass has been broken, and putting back that glass is akin to putting back the trust that has been shattered, at least across the entire Southern Hemisphere, if not most of the globe. So lately, there's been a lot of talk about the global inventories disappearing in silver. I mean, you look at COMEX, it's been bled dry for years. We've talked about that. You look at the LBMA, it's got the lowest level of inventory, second lowest level of inventory for sure in the 140-year history of the exchange. And now we're beginning to see things on Shanghai disappear. We've seen, and we'll talk about that, we've seen the ETFs be bled dry. Everyone says, well, there's great availability in the retail market. Well, that'll change. It'll change really fast if what I'm seeing is actually happening. The American public has been asleep at the switch. They have been infatuated with NVIDIA and Bitcoin. They've even been infatuated with the 5% return in treasuries with no risk. I understand all of this, but they're missing what could be a generational move in metals and in particular in silver. Now, remember, the numbers on the LBMA, we're told there's 800 million ounces of silver there, of which 500 million belong to the ETFs. And when you realize that leaves 300 million ounces, that's about what is left on COMEX in the entire ecosystem in COMEX. About same amount, but in COMEX, there's only about 40 million ounces backing the contracts. The rest of it is eligible and it's not for sale. So who knows what the real numbers are, but they are, 300 million-ish or less globally on the Western system, and probably a lot less backing everything. Keep that in mind. But I did some digging myself, and I went right on to the Shanghai Metals Exchange website, and you can see for 4 straight weeks starting the second week in March, first we had Deutsche Bank, then we had HSBC Bank, then we had JP Morgan, and then Standard Chartered Bank show up one after another for 4 straight weeks. And Jamie Dimon evidently is there right now. And could there be a coincidence with these 4 bankers showing up? And since that first week in March, the Shanghai Metals Exchange have bled down in silver to a new low not seen since 2020. Who knows what deals were struck in the back room at the Shanghai Metal Exchange? But it becomes really interesting when you realize something that I didn't realize until watching Mr. Jensen's interview, and that is that gold cannot be exported out of China without first depositing a bar into the Shanghai Exchange. So then you can export it. So this is contrasting with silver, which can be exported. And it would seem to indicate to me that the banks are there not to talk about gold. It would make no sense. They would have to deposit their own gold first into the vaults in order to export it. It makes no sense. They're there to talk about silver. And it almost speaks to a desperation. Please help us. We're trapped. We have massive short positions that are naked, and I'm going to get into that, but we don't have the silver. Help us. We'll work out a deal. Maybe it's gold related. Who knows? But look, we know that silver imported almost between 5 and 600 million ounces of silver in the last 2.5 years. And again, to put that in reference, COMEX silver inventories are roughly only 40 million ounces of silver, and they're rehypothecated over 1,600%. Right? So 16 people hold the same contract, and it's probably a whole hell of a lot more than that. And we do know that the LBMA inventories are down to their lowest level or second lowest level, debatable, in the 140-year history of the exchange. This becomes even more interesting.